I appreciate every single person on this call, from my team members, our partners, Assad specifically from US Bank. We'll do some quick intros and then we're going to get to the content. If you do have any questions, we're definitely going to have a Q&A at the end. And if it's relevant to a specific slide, either way, type in the chat and we're going to make sure we have our eyes on it so we can address some of the questions or concerns you might have. If you do have background noise, please make sure you mute yourself. If you do want to ask a question in person too, that's absolutely okay. And we look forward to delivering as much value as we can so you can learn as much as possible. We want to share the experiences that we've had during this time and during this market. So if you guys are thinking about doing something, anything real estate related, you guys are well prepared and are in a position to take advantage of the current market. So we'll do some quick intros. My name is Wilson. I started a team about 9 years ago, and we wouldn't be where we're at without our lovely team members. And maybe I'll nominate Ashley to make an introduction for herself.
Thanks, Wilson. Hello, everyone. My name is Ashley. I've been on the team a little over 2 years as a buyer's agent. Here to just help answer any of your questions. I also want to thank everyone that's visiting from outside the Bay Area, here to just learn not only about the Bay Area market, but the home buying process. So welcome everyone and look forward to hopefully seeing you all in the near future. And I nominate Ellie.
Thanks, Ashley. Thank you everyone for joining us. My name is Ellie. I will be presenting today and I've been on the team for almost 3 years now and have a decade of experience in the real estate industry. So to share with you today. And I'll nominate Hassam next.
Happy Wednesday, everyone. My name is Hassam. I've been on Wilson's team for a little over 2.5 years. I am one of the agents on the team as well. I'm here to answer any questions that you guys might have and hopefully give you guys some good insight on truly where the market is today. We have some good presenters today, so we're excited. I think Jenny's on here. I'll pass the ball to Jenny for an intro.
Hi everyone, my name is Jenny Locke and I've been on the team for about 4 years. Bought my first house at the age of 23 years old and bought a few other investment properties in the meantime, and we've been able to build wealth through real estate, and our goal is not only to be your real estate agents here, but also teach you how to build wealth and buy passive income properties, which we'll have another webinar in a few weeks to discuss, but we'll highlight a little bit about that. And then I will pass it to Assad, who is our
Hold on, Jenny. You said you had a few investment properties. I might need you to clarify exactly how many units you have, please.
We're currently at 23 units and we're doing a 1031 exchange and evaluating a 12-unit property. So that will bring us to a bit more, 30-something units to build off of. Thanks, Assad.
That's awesome. Thanks. Hi, everybody. My name is Assad. I'm with US Bank. I've been in the industry a little over 16 years. I feel I'm very fortunate that I've known Wilson and his team, everybody, for almost 2 years now. I've had an opportunity to work with everyone in their office, and I can honestly say they're amazing. Their team is very unique compared to any other realtor that I work with. They definitely watch out for the buyers, and they know the market very well. Not sure who else is on here from the team. Is Wesley here or Carl?
I think Wesley's going to be joining us a little late.
Okay, pass it back to you, Wilson, then.
Yeah, thank you guys for the quick intro. If you guys have any specific questions, we're all here to answer them. So let's move on to the next slide. So we're starting our home buying webinar. You can reach out to us on social. We post, properties that are coming on the market, families we've successfully helped, and some cool videos. Hamid's on this call too, who's our videographer that's been documenting some of our experiences and some of our clients' experiences. So we're very happy to have him and to be able to share that with everyone. Next slide, please. So first of all, welcome. By attending, you are taking an important step towards investing in a secure asset. Today, we'll be helping you gain a basic understanding of the home buying process. And I think a lot of people on this call are very curious about how the market is. So we do want to answer questions based on our experiences of what we've seen interacting with consumers out there. And if you do have any questions, feel free to type in the chat, or if it's relevant to the specific slide, feel free to just unmute yourself. And if we don't get to it at that very moment, we'll definitely have the Q&A at the end to answer it. Next slide. So a couple things we'll cover. The first is the impact of shelter and COVID-19 on the Bay Area real estate market, how we're handling showings, because I'm sure a lot of people have questions on both sides, buying, so how can buyers tour, and sellers, how can we sell if we occupy or do we have to vacate? The market seasonality and interest rates and how that might impact your ability to purchase, the process itself to purchase a home, the financing process, which is another moving part, which Assad's going to cover in detail, and what are some guideline changes that he's seeing on the lending side. The impact of forbearance on qualifying for a mortgage, and Assad is going to talk about that. The home search and mortgage calculating tools, how contingencies might affect an offer, and also, of course, Q&A. And if we missed anything, of course, type it in chat. Next slide, please. This is something that I think for most people, there's a lot of fear, might be a key word in this marketplace. For a lot of people, it might be uncertainty. What I want to present and put in front of everyone is, in times like this, there's always opportunity. There's an opportunity to take advantage of what it is that's going on out there to make the best of your own personal and financial circumstance. And I think with partnering with Assad and with our team, even if it's just having conversations of exploring a purchase or investing, or even if it's a question in real estate, there's a lot of opportunity that we want you to be able to take advantage of. And we want to be the person, the people to help you with that. So when I think of market, as much as there's a lot of uncertainty in and out there, there's a lot of opportunity. So thought I'd put that in there. Next slide, please. So let's talk about the impact of COVID-19 on our local market. Just to talk about some bullet points, the Bay Area and California housing market remains resilient. As much as you do hear of stories of people moving out of dense areas such as San Francisco, where it's more urban, to potentially more suburbs, that is true. Yet there's still a lot of people that work, have family here, have friends here, have their roots here, assets here, that they still see, obviously, living in California and of course our lovely Bay Area as a very viable option for an indefinite period of time. With that said, we're seeing the market still a very even market. What I mean by that is prices haven't really dropped. They haven't really gone up either. There's a healthy amount of transactions out there. There's people thinking about moving out. There's also people considering purchasing their dream home. So it's a really active or becoming more active market. We've kind of had a delayed summer market so far, which we'll show in some slides shortly. Showings are strictly by appointment right now. So if you've heard, there are no open houses. We cannot advertise an open house. Agents will get fined and potentially get their licenses rescinded if we host open houses, because that means we're promoting group showings, which, as all of us know, we need to make sure we abide to certain regulations right now. So how are we selling homes? They're by appointment. And that's for your health and safety too, and for your privacy of touring a home. No one's going to be at the property other than yourself and potentially the agent that you're working with to obviously talk about the home and answer questions you might have. More than ever, next bullet point is virtual open houses are used to navigate a person's desire to potentially take the next step in touring a home in person. So more than ever, it's important for us as agents, if we're working with the seller or for listing agents in general, to not only present the home with beautiful photos professionally taken, but also strategically placed using Matterport, which is something of a 3D tour, or taking videos of a walkthrough of a home. So we can give you, as a consumer, perspective on what it really is like as much as we can digitally through the screen. Moving on to the next three. The next bullet point is inventory is picking up during the summer market despite the pandemic. We'll go over some data, but overall, we're starting to see more inventory, which means for you guys, if you guys are considering a purchase for a primary or an investment property, there's going to be more choices for you to choose from. Next is buyers are seeking real needs and space drive interest in the suburbs. So more than ever, we're seeing buyers really start to voice what they really want. And being in a home, wherever you guys are living in, whether it's an apartment or a condo, or you deciding that your family's growing during this time, I think a lot of people are making a decision to move based on their family's needs. And the external factors out there of showing restrictions of group gathering should not dictate whether you pursue your goal. So we're seeing a lot of people that are keen to the market, that are understanding what's going on, still make decisions and share with us what their goals are, whether it's move to a bigger home, move to a place where maybe you're further away from your neighbors because you might be in an apartment complex, etc. So I think more important than ever, it's important for you to share what interests you have and what needs you have for your family. And last bullet point, rental prices are dropping with tenants unable to pay rent or taking advantage of the rent moratorium. What we're seeing is there are an increased number of vacancies, whether that be because people are moving out of area or they feel like they can't pay their rent. And also people staying in their rentals for a longer period of time and not exploring, being able to take advantage of the fact that if obviously, unfortunately, some people might have lost their jobs or their roles or income might have been affected during this time, that landlords obviously have to make sure that they still provide housing for the people that are tenants. So if you have more specific questions on areas about any of these or comments, feel free to type in the chat. And am I missing anything that you guys might have observed? Ash, Jenny, Sherm, Ellie, Assad?
I think we'll discuss through more of the points as we go through the stats.
Perfect. Thank you, Ellie. Let's move on to the next slide, please. So the first graph statistic that we're going to look at is the impact of COVID-19 on real estate showings in California. So what you'll see is there's two lines. The first in blue is last year, 2019, and the second is in yellow for 2020 for the same period of time. As you saw from January to March 8th, the trend was very similar to last year. And ever since shelter in place was enforced in California, you saw a significant drop in the number of tracked showings, about a 80 or 75% difference from where it was last year. However, as you enter April, May, and of course, you hit the end of May, you see that line of showings increase past what it was last year. And that is what we're seeing in the marketplace, where in the last couple of weeks, there's been an increase in showings, and that might be driven by, of course, the combination of low interest rates and also a realization that people want to pursue their specific goals of moving to a bigger home or a different neighborhood, or something about their current home is not satisfying their needs. So it's showing that there's an increase in showings, which is overall a good sign for the marketplace because there's activity. Next, please. Okay, so in this chart, you're gonna see two things. It's for San Mateo County specifically, but it's quite similar across the board. And if you have questions about different areas, please feel free to let us know. This first is the squiggly line, which is the date or the listed sales price of how much homes have been selling for relative to what it's listed for. As you can see, it's the 12-month viewpoint from August of 2019 at the beginning of it, all the way until December of 19, you saw a slightly slowing market. where list to sales price went from 103% roughly to about a little over 100%. At the beginning of this market this year, from January to March, it was a really fast, accelerating, hot seller's market. What drove that was a lack of inventory and low interest rates. And as you can see, it peaked in March, and ever since shelter in place was enforced, the list to sales price dropped all the way to about 100% from 104% on average across the whole county. This does not mean that prices have fallen. This means that trends have changed. And what I mean by that is if you've been searching for homes in the last 9 years, when you tour a home, you assume that the home is going to sell typically above the list price. When in reality, in the last couple of months, agents and sellers have made decisions to price properties closer to what they perceive the value is. So that's what we call transparent pricing, which is more prominent in our marketplace right now. Now, looking at the bar graphs, you'll see that days on market spiked at the end of the year, and it started to obviously get really fast, it seems, even during COVID. And the reason why it looks like homes were selling faster is because the MLS froze days on market. So days on market started to not count. So if you were a seller on the market, if you were at 12 days on market, it stayed at 12 days. If you hit the market and you have 0 days showing, you stayed at 0 days. And there was a period of time where that was frozen. So days on market has not been a very accurate metric for us to really take into consideration. And if you're looking at a specific property, please reach out to one of our agents or myself to ask about really, truly how long a property might have been on the market. Next slide, please. Next is going to be in red, month by month, available inventory, homes for sale, and in green, what's actually sold. So what you'll see is a consistent increase in inventory all the way from last November to this month in July. And as you can see, last year in September and October, the market spiked in inventory in the county, and that's going to be similar across the board for nearby counties in the Bay Area as well. As you can see, in March, we had 505 homes and properties sell in general in San Mateo, and it decreased the next month in April to about 346. And we're starting to see an increase in June, exceeding what it was in March. So what we interpret of that is people are gaining a little more confidence in the market as phases, as more information is out about COVID, about the state's handling of it. As much as I know we're seeing some spikes right now, people have realized that potentially this is the new norm and they're still pursuing their goals. And that's why you see an increase in sales out there. And of course, it looks like July, we're ending a little bit short of what sold last month, which we should continue to track to see if that's going to be a continued trend of less people purchasing, which means there's going to be more inventory out there to select from. Next slide, please. Next is months of inventory, which you can see in April and May, it spiked to be about 3 months. And then of course, June and July, it averages out to be a little bit less. So overall, positive sign that there is increases in inventory, but it's actually being purchased and people are making moves. Next, please. Next is the last 24 months, or at least all the way up until beginning of 2019 on average prices. As you can see, last summer, April and May, we had the spike in prices overall throughout the whole county. As the market slowed down, the average price decreased all the way until January. And it's only picked up ever since that time. One thing you might not see on this graph is there's going to be sales that went above and beyond last year when it was a competitive summer's market. And because there's limitations on group showings or open houses right now, those very nice properties with subjective values to views or really nice remodels, some of them we're not seeing it hit the price marks of what it could have in the last, in 2019 or 18. But overall, the confidence should be prices have not fallen necessarily. They're pretty consistent throughout the whole county. Next slide, please. And then here's a cycle viewpoint of the San Francisco Bay Area real estate market, which I believe one of our team members is going to have a discussion about. Jenny or Ashley or Ellie, you want to explain this one and give people an idea of what's going on here?
Yeah, so what we see in the overall Bay Area market cycle, and I know a lot of the statistics we were pulling were in San Mateo, but what we've seen is we've been actually going all over the different counties in the Bay Area, from San Francisco, Contra Costa, Santa Clara County, Alameda, Marin, and San Mateo County. And I know a few of you folks are not from here in San Francisco, but still happy to answer any questions or refer you to folks in different markets. So what we see here is it's slightly different from what we saw in 2008 to 2011, which was a housing crisis. And what happened back then was more so there was a lot of stated income financing and loans where you were able to go to the bank and get any loan very easily and just say, hey, I make X amount of money, and was able to purchase properties. And what people were getting were adjustable rate mortgages. So they were fixed for a certain amount of years, 3 to 5 years, and then got adjusted and couldn't afford to live in their properties anymore. So the difference now is that a lot of the people who did purchase in the last 10 years or so since then have built equity in their homes, and we've still seen a fairly stable growth in the area. So we don't see as much of a market decline as we did in the 2008 market.
And some things to add too. No, a lot of people ask, well, how is the unemployment rate affecting the housing market here in the Bay Area? So if you look at the unemployment percentages, a lot of the people that have filed for unemployment have been more so out of the housing market in general. So the prices for the Bay Area market are going to be having jobs that are in tech or essential workers, such as nurses, therapists, and those are the people that are still driving the market. And that is the reason why we're still seeing multiple offers. And the months of March and April, we did see a slowdown because everyone was like, what is shelter in place? Like, I'm going to watch the market because I'm hoping to buy at a really low purchase price. And many people were banking on that. But once they saw that the interest rates were something to lock in, as well as that their jobs were going to be steady and there would be no problems with that, then we started to see a little bit of a later summer market. And usually it starts around the end of May or beginning of May, but now it started end of May and June and what we're seeing today. Next slide, please. So as Jenny mentioned, we have been expanding our search with our clients. Reason being is because a lot of the homes that you can get in the peninsula side for, say, the average price point of 1 million, and you also want it to be remodeled if you're going to be working from home, they're not wanting to do a lot of remodeling projects. So what we're seeing is that you can get more square footage for your budget in these East Bay markets. So such as for this graph is showing the Tri-Valley and South Alameda. So listings accepting offers. So you'll see, as I mentioned, in March and April, there was a significant slowdown, and then now it has matched up to what we're seeing, what we saw last year. And so we're seeing in comparison. So for example, in the peninsula area, you'll see about 3 on average offers per home, whereas in the East Bay, you'll get, for example, Hayward, I just saw one property helped a client get against 19 other offers. So for the East Bay market, it's a lot more competitive. I know Jenny just had a listing that was on market for 2 days in Dublin and had over 8 offers. So it's something to consider, is that making sure you have a perspective of what you're getting into and the strategic offer process, and that we'll be going over as well if you are looking in these areas. And next slide, please. So same thing happened in the northern part of Alameda County. So this is including Oakland, Berkeley, Piedmont areas. I know Jenny just had a closing yesterday in Piedmont, so it's a really nice part of Oakland. And same thing, very competitive situation, but you'll be able to get a lot more for what you're paying for. So same thing as Wilson mentioned, the days on market a little bit longer in the peninsula side, and that's why you're seeing those key differences there. Because also people don't need to commute as much, and so companies are reflecting these adjustments, and now people are considering to expand their searches as well. And next slide, please. And Jenny will go into market seasonality.
Yeah, so this is a seasonality that we typically see in most years, but this year is a little more unique. And what it's saying is most of the availabilities come out in the March to August timeframe. And typically it does slow down a little bit once people are thinking about the holiday season and Thanksgiving and Christmas. So they're not moving as much during that timeframe for amount of inventory. So what we have seen more so probably the shift from the March to August is going to shift from more the May to October timeframe this year, just because March and April was a very weird time for us all here, and we were not able to list any homes and go to any homes. So, but we were still able to help some families purchase during that process. So if we go into the next slide. The other great thing right now where some people are scared, they're waiting, I'm gonna wait for the market to crash or the housing bubble to crash as well too. But what my sentiment is, and I actually just bought a house that I'm living in right now just 2 weeks ago. So I'm a buyer like yourselves as well too. And what I took advantage of is the low interest rates. And back then when probably my parents were buying, or around that time frame in the 80s, interest rates were around 16%. So that is imagining paying 5 times or 6 times what the current interest rate is, around 3% for a 30-year fixed mortgage for your monthly payment. So that's where right now it's at an all-time low. It is an election year, so we don't foresee it to really change or go up significantly, but it might go up next year. We never know. So that's something where I'm taking advantage of. A lot of our clients are taking advantage of the historical low interest rates. And what that means for a rough perspective, at the 3% interest rate, you can borrow about 5 times what you make. And Assad will dive into the lending process a bit more. And what caused a recession in 2008, what was different was that they had the subprime mortgages, as I mentioned, where people were getting loans very easily, and there was no debt to income ratio. So if you're making, let's say, $10,000 a month, the max debt you can have is 45 to sometimes 50% of what you're making. So about 4,500 to 5,000 can go towards any debt. And this is all across the different country, wherever you are. And that includes student loan debts, credit card debts, and any other debts, and your monthly mortgage debt. And previously, they also had low FICO scores. So that's your credit score. Most banks are requiring at least around 640 to 680 plus a credit score to even qualify for a loan. Back then, people were getting properties with 400, 500 credit scores easily. And right now, something that is different, what we're seeing of cause of a potential recession right now is the uncertainty of COVID, but we have seen some of the price adjustments going more flat, and it might pick back up. So we're here in it with you, and investing ourselves as well and taking advantage of this opportunity. Let's dive into the next slide. And just want to get a gauge of who might be renting here and who might be owning. I think there's a mix of people that we know, I think half and half as I look in this group. So if you were renting here in San Francisco, if you're looking for a 1-bedroom or 2-bedroom, it probably will cost you around $2,500 to $3,000. So if you think on the perspective, if you're paying $3,000 a month for rent, that's $36,000 a year. And over 5 years, it's going to be $180,000, which is a down payment here. And if you're going to keep renting, and rents keep going up versus a 30-year fixed mortgage, it's fixed for that period of time for the 30 years and it's paid off and you're building equity. So I want to challenge you guys to think, hey, we're treating this house as a bank account where it's a forced savings bank account where I'm going to pay myself in the future and build equity growth through it. And let's fast forward and then I'll share a little more about my story too of the numbers behind it. So let's dive into the next slide. And the benefits of owning and purchasing, you'll be able to build credit. You'll get appreciation on a home. I'll go into a live example on that. You also get tax breaks. Talk to your tax accountant about this, but there's typically a $10,000 property tax deduction here and up to $750,000 of a mortgage interest deduction. You don't have to worry about leases and your landlords, and you can hang up whatever furniture or paintings you want, paint whatever color your room is, and you have a fixed monthly expense typically if you are getting a 30-year fixed mortgage, and you don't have to worry about rental prices going up. And some of the other things is you will have to save for a down payment, but think of it as for savings, and it's more of a long-term commitment. But other benefits that you can do is be able to rent it out and get more flexibility from that perspective. And the renting, some of the disadvantages is you might be dealing with bad landlords who never take care of things, and things are breaking down and you're living with infestations and such. They might not take care of it. So those are things where you can take more control of, and it's not always a long-term solution. Let's dive into the next one. And there's a lot of different types of investments out there. So there's real estate, there's stocks, there's bonds, there's keeping your money in a savings account, there's Bitcoin, all these other channels. And I think what's important is more so looking at diversifying your buckets and looking at all different options. We're not stock specialists or bond specialists, but we are real estate experts, and that's why I've invested over 20 units of rental properties myself at this age. And why is because we're able to get a cash yield, build equity and leverage from that. And I'll share about my cash out refinance I've been able to do. And it's a hard asset too, and it's going to grow over time. And it's not going to be a quick scheme where you buy and do options of stocks and get money, but it's more of a long-term investment where you're looking for 3+, 5+ years, or even longer term investment. And you get a lot of tax advantages, as I mentioned earlier. Go to the next slide. So the power of real estate, I love sharing this story, and this is a live example. This is my first house that I bought at the age of 23 years old in South San Francisco. So I bought it in July 2016, so about 4 years ago now, and it's a bit crazy. I bought it for $870,000, and I leveraged a home equity line of credit for my parents' house, put $400,000 from that. So it was all, if you consider it, leveraged money, bank money. So they built equity from their home to be able to leverage to get that for the down payment. I got a loan for $470,000 and my interest rate was 3.625%. Monthly payments were about $2,100 or so, and $2,100 with the HELOC payment, and property tax is around 1.15% here in South San Francisco. So overall, my total that I was making, had to pay was about $4,100, but I ended up renting out 3 of the rooms in my house for $1,250 each. So what really came out to it, I was paying rent for $360. That was less than what I was paying beforehand. And that was an amazing thing. And I was like, okay, how can I do more of this? So that's why I joined the team and learned how to teach other people how to do similar things. And in March 2020, this is when I did my cash out refinance with Assad, actually, who is with US Bank, and he's amazing, and he'll dive into the loan process a little more in detail. So the value that I got the refinance was a little over $1.2 million. So appreciation and equity gain was $380,000 roughly. And the loan that we kept was around $420,000. So then there was a few options I was considering then. So I was able to either cash out and then change my monthly payments or like rent out my room at 4 rooms and then get more cash flow. But what I actually did, and these were the options I was deciding at the time, and I actually decided to do a cash out refinance on the home and pulled over $300,000 out of that home to make other investments over time. And it's been able to purchase the out-of-state investment properties and all these other things. So that's where where else are you going to get over $100,000 every single year and just sitting on collecting rent and only paying $360? Nowhere else besides real estate. So let's go into the next slide. So we'll dive into the home buying process a bit more. And the first step is meeting with a real estate agent. And we're a team of amazing agents. We work very closely together, and we're happy to have a conversation with you guys afterwards. We'll also send the slides to you. So if you want to put in your email address and your name, and we'll send over the slides and set up a conversation with you, more of a one-on-one. And then the next part, the fun part, is pre-approval, and Assad will dive into what it takes to get pre-approved.
Yeah, hi everybody. I'm back, Assad here with US Bank. So I'm sure as a first-time home buyer, or if some of you already own a property and you're thinking about investing, one of the things that you're curious about is how much you can potentially qualify for on a new mortgage, what your purchasing power is, and then what your monthly payments are going to look like on that new property, and what the interest rate is. So these are all things that I'm happy to discuss with each one of you individually. Everybody has a unique profile. And what I like to do is a discovery call to find out what your profile is, listen to it, answer your questions, and then lay out a few different options. During that discovery call that's when we can kind of figure out whether a pre-qualification letter or a pre-approval letter is best for you. And the difference between the two is that the pre-qualification letter is more of a verbal discussion. There's no loan application submitted, no documents are collected, credit report is not run. Even though those things don't happen, we can dive in deep, and I'll ask you detailed questions about what your income is, what the source of the income is, your employment, get an idea of what your credit history is like. You may know that because there are a lot of consumer credit ratings sites out there like Credit Karma. So maybe you can give me an idea of what your credit is through that. And then of course, discuss a little bit about your assets. So based on all that information that we discuss, I can do a calculation and let you know what your purchasing power would be, what your monthly payments look like, and answer any questions you may have. So that's what a pre-qualification letter is. So there's no formal application, no documents collected. The other form, which is a lot more powerful in my opinion, and I think realtors value it more as well, is the formal pre-approval letter or the conditional underwritten approval. In that situation, I would request you to complete our loan application. We have a secure website where you would log in, you complete our application, and provide all of the supporting documents. The way I work is that I actually like to underwrite the file myself. So I try to foresee exactly what the underwriter is gonna ask for. So that way, once you are in contract, we have a seamless transaction. So I'm gonna ask for a lot of documents from you guys probably. It's gonna include like your W-2s, 2 years recent W-2s, 1 month recent pay stub. If you're self-employed or if you own any other rental properties, I'll ask for tax returns, bank statements for assets. So once you get all those documents to me, I'll thoroughly review everything and make sure based on the actual documents that I review, you can qualify for X amount of purchase price. And then of course, I'll share with you what that is, let you know what the options are for the different loan programs and what the monthly payments would look like. And again, as I mentioned earlier, I'm sure as a first-time home buyer, that's one of the things that you're most curious about is how much you can qualify for and what the payments are going to look like. So my goal is to get that information to you and lay out a few different options. And that's the difference between these two types of letters, the pre-qual and the pre-approval letter.
Hey, Jenny, do you want to briefly talk about the difference that it can make on your offer as far as escrow timeline goes with those letters?
Mm-hmm. Yeah, so definitely having a underwritten pre-approval is important, especially right now if we're not sure that you're fully able to purchase a property just based on a rough calculation or pre-qualification. So most sellers actually are requesting people to provide pre-approvals even before touring a property, not just a pre-qualification. And on the offer process, it's important because we're able to write a shorter close of escrow. Sometimes now it might take 40 to 45 days for a non-underwritten pre-approval. So having the underwritten pre-approval would be able to shorten that to a 20 to 30 day close of escrow. And that's going to be a big difference to a seller, and being able to go non-contingent on the loan perspective as well.
Yeah, thank you. That's very valuable information. Knowledge is definitely power no matter what you do. So for you to have that information that your documents have been reviewed and you have a strong pre-approval letter, I think it'll give you as the buyer more peace of mind as well. Next slide is we're going to discuss what do lenders really consider when we qualify you? What's going to determine your purchasing power? There are actually two main things that are going to determine your purchasing power. The first one is going to be the first two bullet points. They kind of go hand in hand, and they come up with the debt to income ratio. I'll touch on that momentarily. And then the second thing that determines your purchasing power is your assets and your funds. So how much money you can put as a down payment and how much of a cushion you have as reserves. So going back to the first bullet point, the income. So we'll ask and we'll review your employment history, the most recent 2 years. We have to see that you've been in the same profession for at least 2 years. It doesn't necessarily have to be the same employer, as long as you're in the same industry for at least 2 years. That's what we look for. And if there are any recent college graduates, we can use your education as continuation. So you could be working just for a month, and if you just recently graduated, that's acceptable as well. And we'd be able to satisfy the requirement for the 2-year employment history for that. In terms of verifying your income for your employer, I mentioned it a little bit earlier, but we'll look for your most recent pay stub and 2 years W-2s to determine what your salary is. Some people are paid a base salary, some have hourly rates, so we'll need those documents to calculate how much income we can use for your salary. Besides the salary or the hourly component, you may have a bonus, commission, or a lot of people here in the Bay Area working at tech companies may have restricted stock unit income, RSU component. So US Bank has very good guidelines, in my opinion, to use these type of other components, and particularly RSU. So we would need a 2-year history of you receiving these other components, and we can include that as your total qualifying income to help increase your purchasing power. Okay, so that's the income component. And then the second part of it is your debts. And then the debts that we look at is whatever is reported on your credit history. And we look at the minimum payment on that. So whether it's a student loan, car loan, credit cards, we just look at what the minimum payments are. And then we add that to what the projected housing payment is going to be on the new home that you're looking at. That includes the mortgage payment, property taxes, and insurance. And then that's going to allow us to calculate what's called the debt to income ratio, the DTI. So the debt is the top, and the income, the gross income, is in the bottom. The maximum debt to income ratio that we can go up to here at US Bank ranges anywhere from 43 to 50%, depending on the program. Touching a little bit on COVID-19, when that first happened back in April with the shelter in place, a lot of lenders pulled back on guidelines. And one of the areas that they pulled back on was the DTI. So some lenders, I know some of my competitors right now, they can only go up to 35% DTI when a borrower is putting only 20% down. So there are some restrictions in place because of COVID-19 around DTI, and it could impact your purchasing power. So if you are talking to some other lenders, make sure you ask them what their maximum DTI requirement is. Okay, and then a little bit more on the credit part. So in terms of credit, anything over 700 is considered good credit. And I'd say anything over 740 is considered excellent credit, and you'd get our lowest rates. We do have loan options for borrowers that are in the 600s as well. In terms of credit, when you're looking for a home also, just be cautious to not apply for any new credit cards or auto loans, because that could impact your credit score. When you actually apply for a mortgage, when you get your credit checked as well, I'm sure you've heard that's called a credit inquiry. And that could impact your score maybe anywhere from like 3 to 5 points. So it's not a huge impact on your credit score. and your credit report would be valid for 4 months. So we wouldn't need to touch or run another credit report for 4 months. All right, so moving on to the third tab, which I mentioned earlier, that also impacts your purchasing power, is how much money you have saved up for a down payment. So in terms of down payments, we have options on conventional mortgages that go as low as 3.5% down. So the maximum loan amount that conventional can go to is $765,600. So if you are looking for a property and your max loan amount can be $765,600, we have options with as little as 3.5% down. If your loan amount goes over that, then you're considered true jumbo. And with those options, we do have a product that can go to 10% down to $900,000 loan amount. And then if you are able to do 20% down, we can go up to $2 million. And then again, touching real quick on COVID-19, some lenders have increased their down payment requirements, requiring 25 or 30% down on jumbo loans. But with us, as I mentioned, we do have options with 10 to 20% for jumbo products. For the down payment, it can come from your personal savings. If you have stocks, if you have a 401k, you could potentially leverage that to do a 401k loan. I can discuss that, more detail if individually if you guys want it. And then also there's an option to get gift funds from family. So if you do have that as a resource, we do allow gift funds from family. It can't be friends, it has to be family only. It could be distant family though. And then finally, the last tab under reserves is, under assets is reserves. So besides the down payment and money required for closing costs, depending on the loan program, there's an emergency cushion that's also required. A bank or the lender just wants to make sure that in case something happens to employment, you have some money in the bank where you can make the payments. So the reserves could be anywhere from maybe 6 months to 12 months, depending on your scenario. Last is the property. That's gonna be in terms of the appraisal. So the appraisal is conducted by an independent third party, and they do that to protect you as the buyer and the lender to ensure that what you're paying for the property is actual market value. So that's what the appraisal is, and it's done by an independent third party. Okay, so if you guys have any questions on these slides, feel free to put it on the chat box, or you can ask the questions towards the end.
Yes, quick question from Chanel. Yeah. And I think you mentioned in regards to down payment, what's that ratio typically look like for your down commit compared to your borrow?
Sorry, can you rephrase that?
Yeah, in relation to like a down payment to your total amount that you could be borrowing, is there a ratio that can? I know it's 20% typically on $1 million per, or whatever it might be, but is there a specific ratio you use to allow them to know how much they can borrow based on their income?
It's going to really fall back for the debt to income ratio. So that's why they kind of go hand in hand. So if somebody, they can do 3.5% down, then we're going to look at the DTI, the debt to income ratio. If that's within the guidelines, let's say max is 50%, when we see what their projected housing payment is going to be and their other debts, then they can qualify for that lower down payment option. The lesser money you put down, the higher you're going to borrow on your mortgage. So your payments are going to be higher. But as long as your income can support it and your DTI is within guidelines, then you can do the lower down payment.
Quick question from Wilson. Has these qualification requirements changed during COVID, or it's pretty much the same as what we've been seeing before COVID too?
The two main areas that I've seen change was kind of what I touched on, was the DTI, where some lenders are at 35% max when borrowers are putting 20% down. And then also on the down payment, some lenders require 25% down on jumbo loans. So loans that are over $1 million, they're going to require 25% down payment. Luckily with US Bank, our guidelines haven't changed in terms of DTI or the down payment for 20%.
Got it. Here's one from Julianne real quick, same as far as safety nets in regards to people that were impacted by COVID, such as unemployment, allowing for mortgage assistance, and our protection. Okay.
Yeah. So since COVID has happened, I know there's been a lot of changes with everybody in terms of employment, or maybe unemployment as well. If it has impacted you, the lenders do take that into consideration. So for example, if somebody's still working, but maybe their hours were reduced, we, instead of looking at their income on what they were making pre-COVID, we have to look at what their year-to-date income is.
Got it.
Yeah, so that's why it's important to, definitely discuss these things during our discovery call.
And then the one more before we move on to the next section from Rob here. The main differences between qualifying as self-employed and how expensing on taxes might affect mortgage values.
Yeah, I think I understand the question. So if you're self-employed, you're going to have a lot more deductions for your business. So your net income is going to be lower. So it always has been a challenge for self-employed borrowers to qualify because they're taking advantage of the tax laws that allows them to do deductions. So their net income is going to be lower than what it actually is. And it does in turn impact their mortgage when they apply for a loan, because we do look at what their net income is.
Thank you. We'll save the rest for the end. You can continue.
Sure. So impact of forbearance on qualifying for a mortgage. So some of you may have heard the term forbearance or deferment if you own a property right now. When COVID-19 came out, the government and the lenders opted to help borrowers if they were impacted and allowed them to defer their mortgage payments. So it's a positive thing that a lot of lenders have offered, but at the same time, some lenders didn't communicate it properly. If a borrower is in forbearance or in deferment, they're not going to be able to qualify for a mortgage if they're still in deferment or forbearance. There's two different sets of rules on that. First one is on conventional loans, which is based on Fannie Mae and Freddie Mac guidelines. And if your loan is a conventional loan, then you can still qualify for a mortgage, but you have to get out of the forbearance. So you have to catch up. Let's say if you're behind for 3 months, because of the forbearance and deferment, you have to catch back up. You have to repay your lender those 3 months of mortgage payments and then get out of the forbearance. And then you can qualify, whether it's for a refinance or if you're buying another property, if you're upgrading or if you're buying an investment property, then you can qualify. But if you're still in forbearance, you're not going to be able to qualify for a mortgage. And then the other type of product is the jumbo products. So if you have a jumbo product, a jumbo mortgage, or if you want to get a jumbo mortgage, the rule is more restrictive, where that it requires you to be out of forbearance for 12 months before you can actually qualify for a mortgage. So for anybody that's in deferment or forbearance, it's important for them to know this information, especially if they're thinking about refinancing or buying a new property in the near future. Any questions around that? No?
So I'll dive back into this and I'll share my screen. So a lot of people are wondering, how much can we afford? So I am using our friendly calculator from Zillow. So you can find this when you just search Zillow, how much house can I afford? And then you'll be able to get this link. So I'll actually put it in the group chat right now, so you guys can be able to, okay, if someone can put it in the chat, the link. If you can add that in. So let's just play around with this tool. So if you're making, let's say, $150,000, and if you're combining with your partner, and Assad, this is usually like your gross income, right?
Yeah, that's right, gross income.
Gross income, perfect. And not if you're self-employed. So if your gross income is 150, but you write off 150K, it's not going to be the case. Self-employed would be more closer to your net. But let's say if you're making 150K and you have $250 for, let's say, a car payment and paid off all your student loans and credit card payments every month, and then you have a $200,000 down payment. The max debt to income ratio is typically about 43 to 50%. So we'll be on the safer side at 43%. Interest rates are around 3.25 to 3.5%. We'll just be a little more conservative at the 3.5 at a 30-year mortgage, and property tax roughly around 1.2%. Each city will be a little different. Like for example, Berkeley, it's going to be 1.5%. Oakland's around 1.3. South San Francisco is around 1.15 or so. So every city is going to be slightly different, and we'll dive into community city. We'll likely not have PMI but depending on that. PMI is private mortgage insurance if you have less than 20% down, but we'll just include it just in case if we're doing a little more. HOA is going to be if you're owning a condo, townhome, and some gated communities or newer communities for homes, then there will be an HOA, but let's just say we're not looking at any homes with HOA. So what you can purchase if you're making 150 is around $1 million of a home purchase. And what your monthly payment will be is around $5,000, and that is with the PMI. And the great thing about ownership, as I mentioned earlier, you can look at the amortization schedule and every single month how much you're paying towards interest versus principal. And the first few years, you're going to be paying more so interest versus principal. And let's say if you're paying 20-something hundred per month in interest and up to $750K of a loan, you can deduct this interest from your taxes. So let's say if it's 2,000 times 12, that would be 24,000 that you can deduct from your overall taxable income. And definitely talk to a tax accountant about this. We are not tax advisors, but these are great things that are benefits of owning a home. So I'll stop my share, and then Jessica, you can take over again.
I think I'm up next. So I'm going to share just items as far as the next steps as now after you've talked to your lender and what that looks like as far as looking at homes right now during COVID and moving forward. So the next step is getting out there and looking at properties. So after you've met with an agent, they will likely set you up on a search. And I'm gonna call on just someone in our audience here who we've actually helped in the past. His name's Jeff. And so I was just gonna ask Jeff, what were some things that you were looking for when you were considering where you wanted to purchase and what that home would be like?
Hey, yeah, sure. So when I was working with Ashley, I was looking for something that was a bit of an upgrade in space, which brought us over to the East Bay and in Castro Valley is where we found a place. And I was really focused on a good school district as well. I don't have any kids yet, but I think the idea is that hopefully one day we will, and our home will be ready in a good school district. But other than that, I think homes in better school districts are also higher in demand. So thinking about the exit strategy there as well in terms of potential appreciation, I was really focused on having a good school district.
Yeah, so I think there's likely a lot of people on this call that are very similar to you, Jeff, that they're looking for either a single family home, a townhome, or a condo to expand their family, to grow, and looking for a good school district in this better size and layouts. And if I recall, maybe even a backyard for me. So,
Yes,
so that you're
I forgot to mention.
Yeah, so this is kind of a list that we go over with our clients, but the reason we kind of bring it up is this is something similar to what a lot of people are looking for. And so typically that's why you'll notice that a lot of these homes are the popular ones or become hot homes on Redfin. It's because it does match a lot of people's search. And that's where we notice that a lot of competition does come in, similar to what Ellie and Jenny were mentioning earlier about the competitive offers in these areas, such as Castro Valley, which is where Jeff purchased because of the good school districts and commutability as well for a lot of people now if they do still need to go into work. Some things to consider when you are looking at townhomes and condos versus a single family home. A condo, how it differs from a townhome is it does have a shared entry. Typically it's in a larger building or a complex and you share an entry with someone. Whereas a townhome, typically you have your own entrance, sometimes a garage and things like that. And both of those have an HOA that you'd likely want to take into consideration, and your lender will also do that when deciding your purchase price. So if you are doing a condo or a townhome versus a single family, you'd always want to mention that to your lender, because they will calculate that into your purchase price. And then for the single family home, something to consider with those is as where the HOA for a condo or townhome is likely going to cover things such as the roof, exterior, insurance, common area maintenance. Those are things that as a single family home owner, you would take over that. So things to just consider when comparing homes. And that's what we're here to help you decide what is the best fit for you and those areas. So those are just some things to consider when looking at a home. And then Jessica, next slide, we'll go into when you're working with an agent. These are some tools that we'd recommend when looking for a home. These are great tools. Real Scout is the platform that our team uses to set you up. I know some of the people that I've worked with here are familiar with that. They have an app. It's really great for communicating back and forth with your agent on what you like, what you dislike, and you can favorite and things like that. Trulia is great with crime maps. I know that's really important for a lot of people, is being in a safe neighborhood where you can take your kids and your dog for a walk. So Trulia is what we recommend if you want to take a look at that. Redfin, Realtor, and Zillow are great as far as coming soons. They've now set a new precedent in starting this year that any home that has a sign in front of it does need to go on the MLS as a coming soon. So that's why maybe this year you're noticing a lot more coming soons on these types of programs. And so that's a great way. And to also share what you like with someone that you're partnering with or working with. Family members can join each other on these platforms and discuss what they like about the home, and then share that directly with someone that's helping them with their search. So that's why we always recommend using these. They're great tools, as well as Zillow having that mortgage calculator. And then also, if you're buying investment properties, they will typically mention the rent value as well. So the next slide, we'll just go over a little bit about our network. So our team is part of the top 10% of agents in the Bay Area. And so what that means is we're part of the top agent network, which is where we share even coming soons before they're coming soon with our clients, sometimes known as pocket listings or off-market listings. Some sellers just decide early on that they don't want to sign in their yard, or they want to sell privately. They're just private people. And so this is how the top agents know how to share these types of properties with each other. And then the MLS is what is known as the search engine for all agents to post those properties, so everyone is aware. And then from the MLS, that's how Zillow and Redfin and all of those platforms get their data. And so sometimes something can fall through the cracks. So you'd always want to check in with your agent to make sure that maybe why something's posted wrong or it seems off, it's likely because it was put into the MLS incorrectly. And so I touched a little bit on the off-market opportunities. So when you're working with our team, we'd always want to make sure that we're looking out for properties for you. Once we have a good idea of what you're looking for, we're out there, we're calling other agents that we know in that market. We're building agent relationships. We're reaching out to our brokerage, letting them know we have a buyer that's underwritten, they're looking for this. Another thing that we've changed a little bit. We do still door knock. It's just a little bit different now. We don't get to have those one-on-one conversations like we used to. From the photo here, I was out in my neighborhood meeting neighbors and having conversations. It's changed a little bit. We are still out there talking to neighbors, but what I've done for my clients, and a lot of us have done that's been really successful, is when a client has a specific neighborhood, say 19th Park Avenue in San Mateo, where all the Eichlers are, I will reach out to all the neighbors in that neighborhood. I will send mailers to them, letting them know we have this family that's interested in moving in your neighborhood, and these are the steps, and we're introducing you to them. And we've been very successful in being able to find clients homes that way. So that's another way that we love to go above and beyond for our clients and find them the home that they want in the ideal neighborhood. So those are just a couple of the ways that we've been able to expand our network and help our clients. And then I believe Ellie is going to dive into the fun part, the offer process. Before we go into that, I know we touched on it a little bit about showing homes right now and what that looks like. Wilson did mention those are by appointment only now with COVID, and what's changed is also there's something called a PED form. And on a PED form, it's a property entry disclosure. So essentially, to go into any property right now, myself as the agent and then anyone that's going as a buyer needs to sign these to have entry into the home. So this is with any property that you're going to, you would need to sign this disclosure. And then as Jenny mentioned, a lot of sellers during this time, they may be living in the property. They can request that we provide a pre-approval to show that you're a serious buyer. So that's why it's just very important to make sure that you have your ducks in a row and you've talked to your lender, and that it's kind of taken away that just being able to go look at homes and see how people have updated them. So it's just, you want to make sure that you're connecting with your agent and your lender before going to these properties and signing those agreements. And Ellie, take it away.
Thanks, Ashley. So it is the fun part. It's also the very daunting part that I'm sure a lot of people on this call have heard how many offers per home you get in the Bay Area compared to even Southern California, the burbs where I'm from. In Riverside, you get like 2 to 3 offers, or out here you get 20 plus offers. And so we'll be sharing a little bit more about what the strategies that we use to help you get the home. So overall, these are the items that will be included in your offer package. So you'll have your purchase price, and down payment with your pre-approval. And on the contract, we'll show your earnest money deposit, 3% of the purchase price. And that is usually submitted within 3 days on the contract. However, we do suggest to our clients, and this does push our offer forward, is to write in the contract that we will submit our earnest money deposit within 24 hours. So basically that's just showing the seller that, hey, we're all in, we're ready to start our binding contract, and we really want your home. And it stands out. So most other agents, most other 20 offers are going to have the 3-day submission for the earnest money deposit. Then you will include the contingencies, whether you have one or all 3 or none. And then your love letter, so personal story to the sellers and how you connect with the home and them. And next slide, please. So for the purchase price and how do you know what to offer? So a few things that go into the pricing strategy, and we would have a pricing strategy call once you say, hey, Ellie, we love this home that we toured and we'd like to know more about it. So a few things that go into the purchase price and what you're going to offer are going to be what the recent solds are. So what are similar homes, similar in square footage? Hopefully we find one that's similar in the remodel as well. But sometimes you don't get that. So what we do is we take an average and for which is the closest to give us the idea of what the fair market value is for the offer that we present. The next one is going to be the review of disclosures. So if we see that the roof needs to be replaced and also there's a large foundation crack, and if that doesn't already deter you and you want to get this home at a lower bid price, these are the things that first-time home buyers for the most part are going to stray away from, especially right now. They don't want to do much of the remodel since they are working from home. However, this does create an opportunity for you, so you can get it at a lower price. So what we do is we will add the roof price into the price that we come in at. And also the foundation crack, we can get a contractor to come out and look at how much the work is. So we will add anything that we can in the disclosures that we can add to the purchase price that we consider. So the next one is going to be contingencies and your pre-approvals. So this goes hand in hand, as Jenny mentioned earlier, with the underwritten portion. So if your file is underwritten, that means that an underwriter within the bank has double checked that you can qualify for the loan. So once we add that into your offer, what you're going to get is we're going to go through the contingencies and how that affects price as well. Next slide. So there's 3 contingencies. So you have your loan contingency, your appraisal contingency, and your inspection contingency. So with the loan, if your file is underwritten and you don't go buy a car the next day or while you're looking for homes, that would affect your debt to income ratios. So as long as you don't do that, and we have that done up front, even if it's through automated process of underwriting process, that's very helpful. That will tell the seller that, hey, they are ready to go. They have no issues with their loan. So if we are in the safe zone with that, what we recommend typically is to waive that contingency, and that will make your offer look more competitive. So the next one would be your appraisal contingency. So since we are reviewing the recent solds in the area and we are going to get you a deal on the home too, you really don't have an issue with the appraisal. So as long as we're making sure we're offering at that fair market value, that's when we can recommend, hey, let's go ahead and you're in the safe zone and we can waive this to look competitive. And the next one is your inspection contingency. So with this, we're actually pretty lucky in the area we are in. The sellers typically provide inspection reports up front. So as long as we have a full package of reports and everything is thorough and we know everything that's going on with the home, that's when you're in the safe zone to waive that as well. However, each home is unique. Could be that this is an investor flip and for some reason they didn't provide the inspections. In that case, then of course we wouldn't want to advise you to offer on the home going in blind, so we'd have that inspection contingency. And next slide. So the love letter, I know my past client Diana is here. So great story. There was 3 offers on the home that we submitted, and she wrote a beautiful love letter with her story and her partner, Erin. And basically, when you end up having multiple offers on a home, what ends up happening is you end up having multiple that are close in price. So the next things that they start to review are going to be the terms. So your contingencies, your days of close, and then also last piece is the love letter. So at that time, Diana's offer was similar. Price was 1.1 with the other offer. However, what she did is they went through the property and they connected with the seller. So they connected in the sense that Diana loves design, and the sellers, you can tell that they also love design and they're artists. So they mentioned those specific details, and that's how they were able to make that hard decision as sellers, is providing that connection and your story. And next slide. So here are some of the tips that you could use. And then of course you can send us your template and then we can help edit for you too and add any other parts. So negotiations, as long as you are following this process of a full offer package and you're considering all of these previous steps that we mentioned, your negotiations are going to be a lot more seamless because you're offering your best foot forward. And a lot of the times they have so many options. The sellers have so many options. Sometimes we don't even get a position to get a counter offer out there. So definitely put your best foot forward, have all of these aspects considered, and then from there, it's going to be a lot easier for them to accept your offer. There has been times, for one example recently, they will reach out to the top offers. So when they reach out to the top offers, you might get a multiple counter form. So in that sense, that's when they are countering multiple of the top offers. If you get a single counter offer, then that means that they chose just to have direct negotiations with yourself and the seller. So at times the agent will call you, and Hassan was doing this with his listing the other day. And so he called all the agents before he met with the seller. So at the time when you are a top offer, you might have an opportunity to meet the highest offer and change your terms and how you can best be competitive. So our relationship with the agent is very important. So for one example is that there was another offer that was higher, but I knew the agent and she's like, hey, they're higher. However, if you can come up just a tad, your terms, and I know you personally, I know you will get through the escrow, especially during COVID, then that's what pushed our offer forward. And next slide. So then once you get your offer accepted, you're in the escrow process. So this is a big win. Now you just have to go through that 25 to 30 day period called escrow. So as we mentioned, you will submit your 24-hour earnest money deposit within the 3% and of the purchase price within 24 hours. So title is a company that will hold any money. So realtors don't hold money, sellers don't hold money. Title is an entity there to protect the consumer. So they will check the title of the home against any liens and make sure that it is given, that you are given a clean title. So it's basically escrow is a transfer of the documents from seller to buyer and getting your loan approved. And next slide. And this is where you will go and get home insurance. So I know my good friend Katrina, she's in home insurance and she can get you a really great package, and you will need home insurance and you will need to give that home insurance to your lender, Assad. So they will have you covered in that aspect, and then you go through and go see the home without staging and without the seller's furniture and make sure that everything is in the condition that you saw it when you were there. And then you get keys and you get some nice goods, such as the ones Jenny's mentioned here in this photo. Get a nice photo of your home and, you know, go celebrate, maybe some champagne, relax. This has been a long process for you. So this is a great time where you get to enjoy and move in and have your cute dog. And then next slide. And I believe Wilson was gonna go into some of the predictions here, but he's out. But basically, you know, what we've seen, I've been in the industry for a decade, and I used to go to open houses with my dad since I was a little girl. And I've never seen him shoot himself in the foot for purchasing. All I've seen is how it's helped my family build wealth and how he's able to retire early just by buying one property and using that his primary property, just like Jenny, got a home equity line of credit and started building a portfolio of tangible assets. So overall, if you're timing the market, it's going to be very tough. But overall, through many cycles, we've seen the potential and the growth and the appreciation that real estate is. So we'd be happy to guide you and be a resource, and thank you for joining us. And next slide. And I believe there were some questions too, so Hassan will help facilitate those as well.
Yeah, definitely. There was only a few we had here from Jelaine. There's one question about a property, and I think maybe one of our agents could take this offline. But I think what Assad on a lending side that she wants to know is if she buys a property now fully employed, but then becomes impacted, what protections are in place in California for homeowners?
Sure. So in terms of protections, it's probably going to fall back on what's going on with the forbearance and deferment. So if you purchase a property, you close escrow, you're making your payments, and then something unfortunate happens where you're not employed, then I can speak with us in terms of US Bank. Right now, we are offering up to 12 months of forbearance relief. So what that means is that your mortgage payments would go to the back of the loan. So it's not like you would have to pay that, repay the mortgage when you are employed or in 12 months. It just goes all the way to the back of the loan for you. So whenever you sell the property or if you refinance it again at that point, then the whole amount would be paid off at that point. So hopefully, I don't know if does that help answer your question? If it doesn't, I'm happy to elaborate some more.
While she chimes in, I'll go ahead and drop the second
Okay.
for you real quick. And it's in relation to first-time home buyers. Can previous homeowners qualify as first-time home buyers if they have not owned for a certain number of years?
Yeah, sure. So being a first-time home buyer really doesn't have any unique type of benefit from a lender's perspective. There are certain products that might require it, possibly like an FHA loan. But our conventional loans, what I was talking about earlier, it's not unique to only first-time home buyers. You could have been a property owner, or you could even currently be a property owner. Maybe you're upgrading and you could still qualify for our conventional loan that does 3.5% down payment, minimum 3.5%.
That's awesome. Any other questions that anyone has? That was only two that we saw that was kind of backlogged from earlier. I think you touched on Rob's question for self-employed individual, touched on qualifications with Wilson, and touched on Sunel. So if anyone has any questions, feel free to unmute yourself, drop it in the comment box. Also, before you guys hop off, please make sure to put your email address in the chat box so we can reach out to you guys with the slides and be able to share everyone's contact information accordingly. So please fire away with your email addresses in the chat box.
I have a question. Sorry, this is Anna. I'm wondering how, when you position your offer, say somebody comes in with 40% down for an offer, you have a loan and it's partnered with a HELOC, maybe it's positioned with 10% down or a different amount. How does that look to the seller as they're comparing offers across? To them, they get the same dollar amount in the end. So they're just looking for the highest number maybe. And maybe it's time to close, which a 40% funded in cash offer would provide. Just what is the advantage or disadvantage to having more cash or not? Is it time to close, which would incentivize the seller? What do you see as that biggest difference there, putting less down or versus 40% all cash or something?
Hey, Ann, I actually just went through a similar scenario in Hayward where there was multiple offers against us. And I knew that going in, since I was chatting with the agent, I asked her how many confirmed she had coming in, which were about 14. And I believe there ended up being 29 or so together. But so since I knew that, and I knew my client was only going to write with 10% down, that basically does not give the seller as much confidence that they can get through the escrow period. So they're like, oh, they barely have 10% down. Maybe they won't get through any appraisal issue, or will they have enough for closing costs in addition to that? So it does make you look weaker when you are going against that many offers. So our strategy was to show her proof of funds. So she showed her auntie's proof of funds. So showing a total of 40% down, although in escrow, we are changing it back down to 10% down. So that when I got the call from the agent, she's like, yeah, you're in the top of price. But the reason we're going with yours is because you have 40% down. And so if you can somehow find those extra funds, that will definitely help you. Were you going to use some HELOC funds, it sounded like?
Yeah, to make up kind of the full, maybe like 20%. But I think just in the Bay Area, when you're going against multiple offers, even putting with a HELOC, getting that 20%, it's still like, someone comes in at the 11th hour with all cash or 40% down, or just some, a little bit for a little bit out of reach, I think, for where I'm at financially. So it's just how does that look to the seller? How does that put your offer? How does that position? So it's interesting. Thank you.
Great. Yeah, definitely. As long as I think you're already being strategic with adding that and getting up to the 20%, that's conventional, and that's what's they're used to seeing. 40% is just a plus, and if you can't get there, that's okay. It's just thinking about all of the other factors in the package. So like you mentioned personally, was the days of close, your down payment, your contingency periods, your price, and your love letter, and then your agent's relationship. You can get your offer accepted against other bids, even if you do just have the 20% down.
Yeah, and
That's helpful.
I'm going to chime in real quick just on the seller's perspective. Just tell you what a seller might think of when they do see a 40% down. It comes down to purchasing power. It comes down to financial stability and financial control over being able to fully execute the escrow process. In today's market, sellers are looking to get their money fast, and they want to be able to move on from their current property. So when they do see someone's kind of bottlenecking at that 10, 15, 20%, and they have a lower down payment, they might reserve going with that person that might be above 20% because they're showing that financial contribution towards, hey, this person's actually going to execute in 20 days, actually going to execute in 30 days, control to someone who might not be so controlling in their financials. So on a seller's perspective, it does come across a little bit better when they have that higher down payment, but it's not impossible, like Ellie said, to have that 20% and still perform in other aspects of the offer writing process.
Even I know Ashley and Jenny have gotten offers accepted with 3.5%. It's really, as I mentioned, all the package together can push your offer forward against the others. So don't get too discouraged on whether you're offering with 3 to 20 to 40% down. Even some people that have all cash offers or offers with 40% down sometimes don't get their bids accepted because their package was done unprofessionally and they forgot to check off a box and they were missing a proof of funds and they're missing their pre-approval letter. And just being strategic and making sure, hey, your pre-approval letter, you're not showing all of your cards. If your your purchasing power is 2 million, but you're offering $1 million, those are little things that all add up to get your bid accepted.
Thanks for sharing that. That's very helpful. Thank you.
Thanks, Anna.
If you want examples on how we compile an offer package, I'm sure Ellie, Ashley, Jenny, all these ladies have beautiful packages they prepare that they can definitely share with you privately, of course, to kind of show you what it looks like to put that package together.
Yeah, that would be helpful. Thank you for that.
Just real quick from a lender's perspective to let you know, if a borrower puts down 40% versus 3.5%, timing wise, it's the same thing. Just because they put 40% down, it's not going to expedite their loan or shorten their close of escrow. They still go through the exact same process. And I've been doing this for a long time. So I've closed a lot of transactions for borrowers who are doing 3.5%, 5%, or 10% down. So their offers are getting accepted. And I think everybody touched on some great points. It all depends on these little things that your realtors can do for you, and communicating and making your offer unique and communicating with the listing agent that will make your offer stand out.
Thanks.
I have a question for Assad. So I heard recently that if you pay every 2 weeks on your mortgage and you ask to have the payment put towards the principal, it can actually make your mortgage payment less overall over time. Is that accurate?
Yeah, that's called a bi-weekly payment. So you can reach out to, if you have a mortgage, reach out to your servicing department for the mortgage, and they can set that up for you. And that will shorten the amortization period, and you pay less interest over the life of the loan.
Okay, great. And so you can actually say, I want to put it towards the principal instead of the interest?
Yeah.
Great. Thank you.
Yeah, you're welcome.
Any other questions out there? These are great questions, everyone. Thank you.
I guess I had another question. This is Anna. You know, if somebody is putting an offer on a house, and it could potentially, could the realtor say, yeah, we've got 20 offers. If you just came up, just another little bit, maybe there's truth in that. Maybe there are counters on it. Maybe there's not. There's no way. You kind of are trusting that, hey, there really is another offer out there in the Bay Area that that's probably true because there's so many, but say if you're in a different market like Texas or somewhere where you don't know the area maybe as familiar, maybe you're working with a realtor over there who knows the market better, or through this kind of group or out, you guys sound like you know a lot of different markets. So just, is it just you're trusting that there is a counter offer and they're communicating that transparently, or how do you know they're not lying?
Of course. Ellie, do you want to touch on that one?
Yeah, actually, and I know you mentioned out of state too. Are you out of state, by the way?
No, I'm here in the Bay Area, but seeing the example is really inspiring, right? There's other markets aside from this really pricey one for a second property or a second investment income.
Yeah, I could even use my partner just bought a house investment in Virginia, and he mentioned that their realtor, they use an escalation clause, and that's the trend in that market. Yeah. So I was wondering, I was like, well, can't they just say, the seller, when they see the escalation clause in their contract, my question was, can't they just say there's a bid at that price and use the escalation clause to get all the way to the top? However, their realtor said that they can't just make up and say, oh, there's other offers. They would technically, if you ask, they have to present those offers to you.
That's interesting. So does that same regulation apply in the Bay Area or California, for example? Like if you were looking in Sacramento or some other lower cost geo or lower real estate, yeah.
Right. So we do have to go through licensing through the state. So if you were to ask for that and the listing agent could not perform in giving you that, I'm sure there would be some repercussions to their licensing if they are lying about something like that. So yeah, you could definitely ask for that. I don't see why not.
Yeah. If someone were to lie about having multiple offers, they could lose their license. Mm-hmm. So if they can't prove that, they don't have to disclose everything, but if they can't prove that there's other offers, when they say that there's another offer, they could lose their license. So sometimes they could say, oh, it was verbal, but then they would need to somehow prove that if we thought there was only 2 offers on the table, say, and then you thought that they were pushing you up. The other part is there's 2 different types of counter offers. There's a solo counter offer and a multiple counter offer. So generally, if you receive a multiple counter offer, that means they've sent it to 2 parties. So another way to find out whether or not there are multiple, like other offers, is if they were to send that and there were no other multiple offers, they could also lose their license. So you generally don't see that.
And Anna, in relation to you asking like, hey, there's multiple offers, can you come up a little bit? I can guarantee you that the agents on our team are vetted to the point where they're having the tough conversations with the agent up front to really figure out what's on the table. We're not going to put you in a situation where you're out there kind of like, we don't even know how many offers are on the table, or we're kind of coming back to you like, hey, they're saying come up 5,000, can you? It's like, we're doing our due diligence up front for days on days on days, up until the deadline of when the offers are due, to really figure out what's on the table. And once we figure out how many offers there are, how many disclosure packets there are, and exactly how many have submitted, then we're going to position you the best way we can to say, hey, this is our final and best offering in relation to what's on the table. So you're going to have that due diligence done up front to make sure you're not going into a blind situation.
Thank you. These have been great responses. Thank you all for the insight and information. I appreciate it.
Yeah. And if you want to join us for, we're having one about investment. Ellie was going to say the same. We're having one about investments. Myself, I have 4 properties out of state in Indiana, where I'm originally from. Jenny had mentioned earlier, she's up in the 20, she's almost at 30, and she's not even at 30 years old. Properties. And so we'll be having another one. We're doing this every other Wednesday. So we'll send you, if you want to include your email in the chat, we'll share what other webinars we'll be hosting over the next few weeks. And that'll be one of them.
Definitely.
Yeah.
Thank you.
Any
for joining us.
Any questions from anyone down the line that we see, like Jacqueline, Ryan, Stephanie, Alberto? Anything we can do for you guys?
Hassam, to Anna or anyone else on the call too, if you need any help finding an agent and you're looking out of the area, we have a lot of partners through the side organization and can help you find a local agent in the respective areas. I know my partner Wes was really happy with the agent. We found him in Virginia, and I have referred some over in the areas of Santa Cruz and also Sonoma. If you're looking for an investment or to buy a home in these areas, we could definitely refer you to someone. So we'd be happy to help you do that as well.
Thank you, Ellie. If there's no other questions, we have all the emails that were submitted. We'll reach back out to you guys. Any questions for myself, Ashley, Ellie, Jenny, any other agents that are on the call? We're really more than happy to help you guys. And thanks for joining us. We do have more sessions coming up. We have a full calendar that we'll share with you guys, and hopefully see you guys on the next one.
Thank you.
Thanks, everyone.
Have a lovely evening. Thanks, Assad.
Yeah, have a good evening. Bye.
Everyone.
Bye.
Thank you.